here, and we are live. Yay. Okay, cool. Woo! We're live at 1 o'clock. I made it on time. All right. Hey, everybody. It's Linda Schulte. Yes, I'm in my disco here again, as usual. We're doing a conversation today with Christine Wilson with the mortgage firm. And we're going to be touching on a couple of things in regards to the Orlando market in general, how from her perspective, from the mortgage side, and I'm going to talk about the statistics that just came out of what happened in April of 2020 with everything that's been going on in the market. So this is fresh off the presses that I've got here on the other screen. So we'll be showing that. So we got waiting for a couple more people. So this is really good information, guys. So I really, really highly recommend you getting on. Also, just so you know, you can place some comments on here if you want to ask any questions. I'm not sure if Christine can see them, but I can actually tell her what they say.
Yeah.
Yeah, I'm not sure if you're able to see them or not. So we're also going to touch on some other things regarding mortgages in general, that it's important information we always get out. So let me do this. You guys know me. I'm Linda Schulte, broker owner, Schulte Realty here in the Central Florida area. And Christine, tell us who you are, what do you do, and tell me something good.
I was trying to invite some people to watch the Facebook Live.
Awesome.
My name is Christine Wilson. I'm with the mortgage firm. I've been in the mortgage business for over 15 years. And what is good? Rates are awesome. They're unbelievable. I mean, they are so incredible. And Linda, truly, the mortgage business is just very blessed to be able to help a lot of people in this situation. In these situations, we're one of the industries that have been able to help a lot of people in these times, and with these rates being so incredible, the lowest they've ever been, so it's just been really incredible, and this is why I love my job, is helping people.
Yep. Yeah, and that's a good, and that's why I love working with you, because I'm all about helping people as well. Well, one of the things, and I don't know if it came from you or no, it was somebody else. I saw somebody posting that they said they were doing refinances as low as 2.87. And I know rates, it varies upon, with people's individual situations and circumstances and things like that. And also, don't forget, people, sometimes you get a really low rate because they actually are buying down points, and I don't think people realize that.
Oh, yeah. Well, I would say most of the lenders that right now are charging, and I'm not a big point by points kind of lender, but I have to say that this is kind of going to be one of those refinances that I hope that you won't ever refinance again. Because refinancing is not inexpensive, even though there's a lot of advertisements out there for inexpensive refinances, but that usually is going to mean your rate is going to be a little bit higher, and then it kind of negates the reason to refi. So if you're going, it just depends on the amount of points that you're going to be charged for the refi. If it's minimal, then yeah, and if it's buying the rate down. But if it's a lot, it might not make a difference. But your loan officer should run the scenario through. What are you saving? What does that eighth or a quarter interest rate cost you? And then what does it save you? And then what's the break-even point? Is that break-even point a year or 2 years from now? Then yeah, you might want to buy it down. But if it's 3 to 4 to 5 years down the road, you might not want to buy it down.
And, I'm going to go ahead and put up our screen here. One of the things, too, I guess, to bring to people's attention is sometimes the loans that you get now, they could be assumable. Is that true?
No.
Nope. Okay, gotcha. I know they used to be a long time ago. So, just
loans I think are still assumable. I believe.
Which ones?
FHAs. I think
they're
assumable, but that's the only ones I believe.
Okay. So one of the things that we wanted to talk about was I can talk about real estate and what's been trending. And so this is, like I said, this is hot off the presses. I could talk and speak about what I'm doing personally as a realtor, as a broker. And I'm just going to tell you, compared to what I did last year at this point, I'm only down by 2 closings, just by 2 closings, which is amazing, being in this pandemic that we were in. Now, don't get me wrong, I was on schedule to probably double my business here in the summer. That's not going to happen, but I'm still good. I'm feeling, pretty positive about everything. And one of the things I just wanted to, just talk about is what's been going on in the market. So if you look up here in 2019, Christine's just talking about how low the interest rates have gone compared to from last year to this year. It's even, I think, Christine, you could potentially get something even lower. But one of the things I wanted to show you is the number of listings. See, the new listings, 2814 compared to last year. We're practically half as many listings. And then people say, oh, wait a minute, how many sales have closed? Oh, our sales are down by about 1,000. So that's actually not so bad if you consider that we have half of the number of homes on the market. They're also going faster as well. So Christine, one of the things we were talking about before is some people keep on thinking that we're in a seller's market or we're in a buyer's market. We were just chatting about that real quick. So I feel I have really good buyers out there that are well qualified. I'm having a bear of a time to find any homes. So what you were just talking about, people having perspective that we're on we're in a buyer's market, and we're not actually. So go ahead and
well, Linda, before we came on live, Linda and I were just saying, well, I can't believe that there's so many less listings. So with less inventory, that typically means that it's a seller's market because the sellers have the upper hand. But it's super weird right now because it's actually like what is on the market is not great. And the sellers keep on thinking that they can sell whatever they want on the market. Basically, homes that haven't been kept up, maybe the roof is expired, at the end of its life, and they think that they can't do it now. The buyers are just walking away. The buyers are like, look, if you don't do your stuff to your house, then we're out. We're going to go to somewhere else. So it's interesting market. It's like this, it's a seller's market, but because there's such few homes on the market, but then we have these buyers, super awesome buyers. Because if you think about it, the buyers who are out there right now that are not buying are the ones probably affected by COVID, right? They're the ones that are they're not out there, and those are the people that have been affected by COVID. And so then you've got all the people out there that have not been affected by COVID. Their businesses are still going strong. They're still making money. They've been innovative. They've rejuvenized their business, and now they're doing great online or whatever. And they're smart, and they're not taking it from sellers that want to sell this house that hasn't been taken care of. Do you find that?
I am actually, and I'm actually shocked that sometimes when I walk into homes and the level of maintenance that's lacking of, or cleanliness. That's the other thing. It's a little bit shocking, and that's what I tell all my listings. I said when I walk through, I'm gonna walk through here. I'm talking with a buyer, and and I point out the things in the the corner of the room, and they're like, really? People look at that? I'm like, yeah, it's all about maintenance. So yeah, we're finding it that homes are. People are expecting them to take a home that's got an 18-year-old roof. Well, you take it or leave it. You got people coming in and saying, well, the AC is 25 years old. We'll take it or leave it. You know what? They could actually walk away. They don't, people do not have, they think they have to buy because our interest rates are so low.
Right.
But the people that have their homes on the market and your house is good, it's listed well, it's in decent condition, and it's priced all right, they're going to go for that house.
Yep.
So
rates are going to be low for a long time.
Yeah,
they are, because I think we talked about this in our last Facebook Live. The mortgage and the real estate business, we put a lot of people to work whenever we close a deal. As soon as we close a deal, what happens? The buyer, if you're a home buyer, you become best friends with Home Depot. I just talked to a client of mine that closed today. He said, oh, we're going to replace the AC. He's going to put an AC guy to work immediately. And so we put a lot of people to work whenever we close deals. If we do a refi, and I save somebody, $800, that financial, I always tell people, give that $800 to your financial planner. Make sure that you're investing. Investing is such an awesome time. But I don't know what my point here was, but rates being low. Rates are going to be low for a long time because our economy, because of COVID, is going to be, it's gonna need chugging. It's gonna need help. And interest rates being low is definitely going to help that with refinances or purchases.
Yeah, that's one of the things that's, I'm sorry, Christine, but you're killing us because you keep on refinancing everybody. Like, I'm just going to stay in my home. And that's, great for your business.
Ooh, I have a good point though with that. This is what I say. That's a great point, Linda. And I always tell people, I always have the, what's the band? Should I Stay or Should I Go? Who sings
That's
that?
the Clash. That's the
The
Clash.
Clash. I knew you would know. I always say, okay, we need to have the Clash conversation because should I stay or should I go? Because that is a really important conversation to have with a great lender that can give you great advice, because you have to know your numbers. And I would say 80% of the time, Linda, I'm telling people, it's time to go. Sell that house, go buy a house with a pool, because they don't really truly have the cash or the equity to pull out to build the pool that they want. And it's a heck of a lot cheaper to go buy a house, finance the pool, finance the other things that they want, versus staying in the house that they bought 5 years ago that they knew was a starter home.
Right. Yeah, and it's one of the things talking about we talked about the interest rates. So if you look over here at this graphic, obviously the green is showing what's in 2020. Look at that, Christine, 2018.
That's
I
great.
mean, and you were talking a little bit about like what happened in 20. We were looking at some of these numbers, and we're like, what happened in 2018 that was so high? And then it went down a little bit, and now we're like super low in 2020. What was going on back in 2018 that the interest rates were so high?
Well, I think that, this is my opinion. This is my opinion. So this is not fact, but in my opinion, the economy was doing very, very well back then. And so what happened was, when the economy was doing well, they kind of pushed rates up a little bit to see if the economy could really if they had something to grip onto, And so they pushed the rates up a little bit. This is in my opinion, to see if the economy would hang on there, and it was really bad. There was any mortgage company out there that was strictly refinances, they almost or did go out of business, and because they couldn't hang on, because the refis will drop off as soon as. And let me make a little side note about that. And that's why refinancing is great. Whatever, we're enjoying. The mortgage lenders are doing it, but that is not our bread and butter. We always put our purchase business first, because that will always be a steady thing. Somebody just actually came up to me, and after the fact, 3 weeks into it, came with a tiny bit of a lower rate. And I said, you know what? You're just causing, my purchase business is more important than this refi. And go ahead and go. That's fine. I don't care. I'd rather make room for purchases, because those are super important. And that's what's going to make us as an industry move forward.
Right. And that's what's really good about you, is you're always looking and analyzing and helping people with the should I stay or should I go? I do the same thing, because sometimes it makes more sense for somebody to stay in the home, take out a loan, a line of equity and rebuild or something like that. So it's always good. You're not always looking about how you can get money in your pocket. You're looking about what's the best thing for the consumer. So I just wanted to do a real quick look at this graphic over here too, and just show how the mortgage rates have really gone down over the last 3 years. You can see it's really, really gone super down. Now, Christine, we were talking about this earlier as about the new listings. Granted, some people have had refis done. Some people have been afraid to put their homes on the market because of COVID. We've had a lot of people withdraw temporarily off the market, but this is almost half as much as it was last year for new listings.
Yeah.
And so people are thinking, oh, it's a buyer's market. There's no buyers. There's buyers. The problem is we have an inventory problem again. So it technically turns,
it's a seller's market.
Yep.
It's a weird seller's market. It's a weird seller's market.
It's unprecedented, as they say. And the thing is that if you're thinking, contemplating about selling, not sure, one of the things I just say, it's like, I'm going to speak for myself and for Christine, is that we're consultants. We will talk to you about the situation, what's going on. And it's not she doesn't make a decision for you. I don't make a decision for you, but at least you can be a voice of reason to talk about it and see if it's a possibility of being able to list your home, and what would be your next move. Where are you going to? And by the way, folks, I'm talking to people coming from out of state. I think I've got 4 different people wanting to come out from out. They want to be in Florida.
Yeah. Yeah. Oh, that's a huge thing. That's a great point to bring up. That is a crazy, which we've already seen it in the last 5 years. We've already seen the trend. I kind of already saw this and could see it coming. But it's been a way big uptick of people up north wanting, just because they were forced to work from home. Now their company said, you know what, you can work from home now. And they're like, peace out. And they want to come down to Florida where their family's at, and we probably will see this other places too, where they may want to go live near their families, in other states, not just Florida. But we are definitely seeing an uptick in the amount of people that can work remotely and they want to live in Florida. Mm-hmm. It's awesome.
Yep, and it's a great thing. And so some people are talking and saying that they think that our market's going to crumble, or when's it going to go down. And we've had this conversation several times before, and it's I don't see that happening, not with what I'm seeing and hearing. And real quick, I wanted to jump back over to here to show you my this graphic. This is about the new contracts, Christine. Oh. So you can see the new contracts are really down compared to last year. And, it's not because we don't have good buyers. And I'm going to say that over and over again. Mm-hmm. It's because there's not enough homes on the market. We've got excellent buyers. Right now I'm beginning to see everybody get back to work and things like that. So as far as, from your perspective, from a lending perspective, because you talk to a lot of different realtors, I'm talking about myself only. I can vouch for what's happening with my world. But what are you seeing? Are you seeing more people are buying homes under the 250, above the 250, jumbos? What do you see is trending?
I see definitely people over the 250 range, because like I said, the people that are under the 250 range, unfortunately, those are the people that their jobs probably have been furloughed, or or something like that, where they're kind of waiting to come back, and so then over the 250 or the 300, the 400, that's where we're really seeing the prices at, because those are the people that have a little bit, their jobs or their companies have been ahead of the curve and have already been working at home, or their online businesses and things, and they really haven't been affected. So
right. And that's what I've been seeing as well. Now, we still say if there's a house for sale, it's in priced correctly, in good condition, and it's under 200, those are going to get snapped up quickly, because we still have cash investors. We still have people looking to buy that. A lot of our first responders, firefighters, police, and so forth, they are still they're buying under the 250, and they have solid jobs, and they just want a good home, good neighborhood to live in. So, we still have a good market for that happening. But like you said, the folks that are buying in the above the 300 mark, they're the ones that haven't been furloughed or have seen very little change in their income. And you mentioned something too about reinventing. People have changed. They've figured out how to do things differently. Mm-hmm. And, and I know, especially in the real estate world, I've seen so many people be creative in how they do things virtually. I had been doing things virtually already. I was already doing the virtual open houses before all this happened. I was doing the walkthroughs. I was doing open houses on social media for other agents because they wanted my help. But now I picked up my game a little bit with the Matterport and so forth. So we do have, like, if you're looking to list your house and you're like, I don't really want people traipsing through my house that aren't solid, not a problem. Call me. I've got lots of ways and ideas on how we can make that happen. In fact, one of the houses I have for sale in Winter Springs, it's listed for $360. I have had multiple agents thank me for all the videos that I have done and all the walkthroughs. So we've got ways of doing things. So let me go over here.
Question: does a house sell better right now with people in it or without?
Well, Okay, so that's a good question. A lot of people don't want to go into homes that are occupied. So they're looking at more. So it used to be we'd prefer to go into a home that's occupied because it's the homey feeling. Right now, my thing is I'm suggesting that we figure out a way to get you out of the home, get you somewhere else, maybe stay in an Airbnb for 30 days if it's legal to do so, and get the home staged. Get a stager in there. It doesn't have to be full on staging, but just so it has that homey feeling, because it really shows better that way. So that's what my suggestion is. But so not everybody can afford to do that. Not everybody wants to do that, and so it could be a risky thing as well. But at the end of the day, if you want to sell your home, and also some people say it's such a hassle. I have to get out of my house and disinfect everything, and people are touching things. So if you want to sell your home, let's do something that's going to make it easy peasy for everybody. I'm going to go ahead and show you this other graphic here that I've got. This is the ones that are under contract. So if you look at this for April compared to last year and even the year before, our under contracts are down low. Okay, this is not a sign. This is not a sign of our market. This is a sign of there's not enough inventory. So I hate to keep on harping on that, but I feel like it's a necessary thing for me to be saying. So as far as any of the with the refis, like what are you seeing in the refis? Are people mainly doing it to save money? Are they looking to improve? I think I've heard some people are actually getting some money out so they can fix their homes up so that they could list them. What are you seeing?
I say when I come home at night around 7:30 or 8 o'clock at night, and because I call jumping away home, the majority of my conversations on a day-to-day basis are half of them, well, not the majority, maybe half of them are about talking people out of refinancing. I think a lot of times people right now, it's called, we have two names for this, either mortgage rate envy. So a coworker comes in bragging about their interest rate, and then they're like, and they have a 40% loan to value, they have 800 credit scores, they have a $400,000 loan. Yeah, that person's going to get the best rate, but they come in and they brag to everybody, and then everybody comes to me at wanting the lowest rate. And so, and a lot of times people, you're fine where you are right now. It really depends on what your goal is. And if your goal is to keep, this is what I'm seeing. If your loan amount is low, but when I say low, I know it doesn't sound like, it sounds like a lot of money, but like 180 or 200 or less, going from a 4% rate down to a 3.25% or 3% is not going to be a huge difference in monthly payment. And it's going to cost you to do that. So you really have to look at the numbers. Yes, the interest rate is lower. I just talked somebody out of it. I was just like, I just don't understand. Your goal is to pay this off. This is how I tell people to look at it. Look at it. Your house is an asset, right? Mm-hmm. It's an asset. We all say that. So if your house is an asset, a bank account is an asset, right? Same thing. So your house is an asset. So you want to look at that asset. If you have a ton of equity in this house and your goal is not to do the cash out refi, and you don't need the cash out, and your goal is to pay it off, just to make a few extra payments towards the principal. Mm-hmm. In general, you can save interest, the amount of interest that you pay over a loan, by two ways. One is lower the interest rate. That is one way, but it's going to cost you money to lower the interest rate by doing refi. Refinancing is financing again. So mm-hmm. It's the same cost that you had when you bought the home. It's just without real estate agents. That's what I tell them. Without real estate, it's just, we just don't have any agents. It's just, but it's the exact same thing. Mm-hmm. The number two is, or you can pay extra towards your principal. If you pay extra towards your principal, pull out your amortization schedule, look at what your principal portion of your payment is, pay that, and you will skip down on your amortization schedule like crazy. Dave Ramsey has a payoff calculator on his website that I always send out to those people who are not great candidates for refinances, but they really want to pay less interest over time, and they have money in the bank already. Right. And this is just a bank account that they want to focus on, is their house. That's right. You have to look at it, because if you already have money in that bank account, you already have a lot of equity, Well, then
Mm-hmm.
why don't you go get a financial planner and start putting money in other bank accounts? Most of that, this is what I always say when people say, oh, we're just going to pay extra towards our principal. And I say, well, how much money do you have in the bank? And I can hear what they're thinking immediately. Why do you care how much money I have in the bank? When I just told you I was gonna do this really smart thing and pay extra towards my principal. Well, then they tell me they have zero money in the bank. I'm like, well, why are you paying more money? That bank account already has funds in it. It already has equity in it. Pay money, save money over here. And sometimes a refi can do that for you. If it can save you $500 to do that refi, and then you take that $500 and put it into already has funds in it.
Oops, sorry.
In it. Pay money, save money over here.
My phone just started announcing everything that you were saying. Sorry about that. I'm learning my technology, so here's my phone. So, yep, it's true. And, here's the thing too, is that again, I go back to Christine she's a loan professional, mortgage professional. She's also a really good consultant, so she's good to give a call and just talk through. And also, just so you know, if you guys want that link to the Dave Ramsey amortization payoff schedule, shoot me a message, and I can make sure that we get that over to you. Shoot me an email or a text message me your email, and we'll get that over to you as well. Also, if anybody wants a copy of this Pulse report, send me an email as well, and I'll be able to get that over to you. No problem. Okay, so I want to go over to one other thing, because I told you I'm having a hard time finding houses for some well-qualified people. So what does Linda do? Linda becomes very inventive. Linda goes to, let me see what's temporarily off the market. Let me see what's expired recently. And unfortunately, I did that with one of the buyers that you're working with. I did that. I was a day too late of going and checking it out, but they had already leased the home out. But I wanted to show that what's going on right now in April. The withdrawals and the expireds, they're neck and neck with what we had last year. So that's not such a bad thing. That it's there. But in March there was more. So there's significant people withdrawing their properties. So again, that's just nothing because the market's crashing or they're not getting. It's not necessarily everybody saying that they're not getting the money that they want for their home. It's just because people got scared and took their homes off the market. So and this is where we as realtors have to be creative and inventive. And we have to, if I see something's temporarily off the market, I see it's been withdrawn or expired, I go back to the agent that had the listing and I'm like, hey, what's going on with this? And then sometimes I've actually revitalized some deals for those folks. They're like, oh, I'm so glad you called me. Let me reach out to them and see if we can make this happen. I've sold houses like that off the market.
So you're finding the number one reason people withdrew is because of COVID or because they weren't. What are you thinking?
Well, I do believe the temporarily off the markets and the withdrawals, I do believe it's directly related to COVID because of how high the spike is for March and for April. Then there's some people that were planning to buy another home. And they decided like, hey, I'm going to take a step back here and wait. And then there's the folks that had their home under contract. Their contract for the sale of their home was contingent on the sale of the other person's home, and that buyer failed. So we've seen a domino effect, and then they go, I'm done. I don't want to even be bothered anymore.
Yep.
And that's fine. I mean, people, sometimes you just got to stop trying to push something that's not happening. And I get that. But if you had your home listed before, and now you're like, okay, we're coming out of this, I just have to say this is a really good time to get back in with your agent. Or if you weren't happy with that agent, go find another agent, go talk to somebody, because the buyers are out there.
So Linda, I've said this before, like we are as an industry very lucky that this happened. I don't mean to say it in a bad, but that it happened during our highest season. Do you believe that? Because I mean, in our business, for those of you that don't know, from March until July, end of July is our go time. There are no vacations on my team. It is like crazy busy. That's our high time. So If this would have happened, I mean, because the real estate business goes in sync with the school season. So then we're gonna, as soon as the kids go back to school, August, September, we kind of dip down in August, September, and then we kind of go back up October, November, December, and then we dip back down in January, February, and then we go back up March, April, May, June, July. So what if this continues, and I'm hoping that, you know, things will loosen up a little bit, but I mean, I'm a little bit like just thinking ahead of it of what August and September are going to look like.
Mm-hmm. I think, in my opinion, I think what's going to happen is we're going to have an awakening, and people are going to be ready to do some things. I think it's going to start happening here in June, and then our closings are more than likely going to happen later. We're going to have the August, September closings, where we used to not have any. That's what I'm seeing, is because I've got several people that are like, okay, let me stretch my arms now after being locked down for 2 months, and they're getting ready to start doing stuff, selling their home, buying a home, and things like that. So yeah, and I told you my statistics. I'm down by when I did March through May, I think I was down by 3 sales compared to last year. But from the beginning of the year to now, I think I'm only down by 1 or 2 sales. Had this not happened, I think I would have had a heck of a lot more sales. But thank goodness and thank God, it happened now. So I've stayed steady. My not a bump in the road. The other thing too, I might have less sales, or we have less closings, but also the average sales price has gone up. So I looked at my own statistics. So it went up, about $50,000 per closing compared to last year. So that's a good thing. So people are saying, this is on average by $50,000, by the way. People keep on saying, I'm waiting for it. When's the market going to fall? When's it going to fall? Yeah. That's not something you want to be focusing on, because as Christine said earlier, if the housing market starts to crumble and go down, it's going to mean that our economy is shot. And we don't want that to happen, because Christine, tell us again, who's the number one economic driver in the United States?
It's mortgage and the real estate biz. I mean, it really is. We put a lot of people to work. And give a lot of people jobs. And I mean, that's not in my opinion, that's how it is. I don't know if it's written anywhere, but it has to be.
It is. It says, and I think and I think it's also medical in the United States is the driver. So anyway, one of the things real quick before we stop this conversation is because the reality is there are some people who are struggling financially. There are some people that are having trouble because the unemployment is so high. And before I jump into the forbearance piece of it, and again, this is my opinion, when the statistics out there say our unemployment is at the highest it's ever been, it's comparable to the Great Depression, please remember that this is a moment in time. That was over a time period. If you think about it, when we have a hurricane that comes through Central Florida and we have to shut down for 1 to 6 weeks, we have a lot of people out of work, but we don't sit there and like scream about it. So you can choose to follow the hysteria and the sky is falling, or you can pull up your bootstraps, get out there, figure out what you're going to do next.
Reinvent.
And I talked about that one time before, how many times I've had to reinvent myself. And that's just as what my profession is, reinvent myself for how I am as a real estate agent. So off that soapbox, those who are having trouble, who are struggling to make their mortgage payments, the banks are going to call you and they're going to be your friend, potentially. But Christine, I'm going to hand it over to you. Help us understand what's going on with what they're trying to help out with. And not all of them are horrible and bad.
No, if I would look at it like this: forbearance is a need, it's not a want. So make sure if you need it, it's there. And if you cannot make your mortgage payment and you've been affected by this, please call your servicer and ask them for details on what options that you have. Make sure, but I think what we're trying to, as an industry, avoid is the people who believe that this is a free ride and doing it as a want. oh, because we had this back in with Hurricane Irma. I remember, I'll never forget with Hurricane Irma, I got a slip of paper at my house for my mortgage and said, if you need to skip payments and go into forbearance because of a Hurricane Irma, please call us. And I thought to myself, oh my gosh, this is what people are going to do. They're going to think that it's a free 3 to 6 months reprieve from their payment. And it is not, people. They will come after you for that money. Your servicer is there, and their fiduciary responsibility is to the lender. It's not to you. So they're not doing you any favors. But if you do need it, then it's there. You should call your servicer and ask for the options. If you don't need it and you can make your mortgage payment, when I say make your mortgage, I mean you should stop making all other payments and only make your mortgage payment, because this is your shelter, people. This is your home. This is not a credit card that you went and had. Make sure you make your mortgage payment. I can't say that enough time, because it will come back to haunt you later. And then if you want to refinance later, it could come back to haunt you. It's not good. A friend of mine just texted me. I was just telling Linda and said, hey, I saw your Facebook Live a little bit too late about forbearance and foreclosure, and I already did it. What can I do? Get caught up immediately. Get caught up, because all they're doing is delaying your payments for 6 months. What are you going to do in 6 months? I mean, unless you think that you're going to have this huge influx of cash in 6 months, why would you do a forbearance? You're either going to make the payments. It's like someone saying, hey, would you rather pay this $5,000 over the next 6 months, or would you rather an increment of payments, or would you rather just give me $5,000 in 6 months from now? Well, yeah, I'd rather do it in payments,
Right.
So,
right.
so that's how you have to think about it. So
it's more
definitely there's a lot of people that need to do it, and you just need to call your servicer and talk to them.
Yep. And again, the servicer is the fiduciary responsibility is to the investor. Is that what you said?
Yep.
And so just remember that. And while, I'm not saying any of them are out to get you or doing any kind of funny games, but just think with a clear head about what they're offering. We get all the information. And in fact, if you need to have a discussion with an attorney to have them review it, I highly recommend it. It might cost you a couple $100, but that's better than losing your house in 6 months, right?
That's right. And think about, now you got all this equity, now you got equity in your house. And if you can't make those payments back, they're going to come back there and get that house. I mean, now there's equity in it, and then you lose all that equity. So make sure that you make your mortgage payments. That's all I can say. We've all been taught that. Our parents have always told us that. No matter what you do, make your mortgage payment.
That's right. That's right. And as far as it goes, if you're a renter and you're having trouble getting, doing your rent, everybody says, oh, they're not going to kick me out. They can't kick me out. But just remember, if you can pay your bills, you pay your bills. If you can't, then you might need some help. There's lots of organizations out there that are able to help out with rental assistance, sometimes even mortgage assistance. So if you guys are interested in any of that information, just shoot me a message and I'll see what I can do. I do buy and sell houses. I do real estate, but I'm also obviously somebody who likes to help out the community, help out people, especially with all my charitable things that I do. I'm just going to do a real quick, show you my website. I just wanted to make sure everybody knows I have a beautiful website out there. So if you want to check it out, it has some of my houses that are listed. And I unfortunately only have one active listing right now. So it is, need a couple more listings, and I need more listings. Real estate agents, get out there and find us some more houses, because I need to sell some houses for you. And just real quick, I just wanted to recap, kind of what's going on, that, we're not in some kind of tragic buyer's market at the moment. We're sort of still in a seller's market, but like as Christine said, it's in a strange way. And oh, hey, Julius.
I saw that. I waved him.
I see that. Yeah, it's awesome. Hey, it's just yep, I see that. It's just a strange time, And again, if you need to buy a house, go ahead and do it. If you need to sell a house, go ahead and do it. And sometimes people try to time use the word time the market. That's always the dangerous thing to practice with. So, but just real quick, I just want to say, we new listings are at like half of what we had last April. Generally speaking, this is our selling time. This is when everybody's putting their house on the market. It's best time to sell is in the summer, just before the springtime, just before the summer. So we're so down on having enough people to buy houses. Also, our contracts are pretty high that are under contract. So people are still buying homes. And again, it's just I'm not running around being a Pollyanna and like everything's perfect and everything's great. But I think we're coming out of this. People are coming to Florida still.
Mm-hmm.
People are needing to buy and sell. And Christine, you can tell us the interest rates are
amazing, unbelievable. As some people, they are. I mean, it's the lowest they've ever been. It's just crazy, awesome.
It really is. It really is incredible what's going on with it. All right, so we've been on here about 40 minutes. As I always say, we could sit and talk about stuff. We talked about a lot today. Yeah. And again, if anybody wants this information about what I've been sharing on Facebook,
I want to mention one thing, Linda. A lot of people have been a little bit of how it's affected the mortgage industry about this COVID and getting approved for a loan. And there's been a lot of questions about that. Can I talk about that real quick?
Sure.
All right. So, because a couple of things. One, if you've been furloughed, we cannot do a loan. If you're not making the income, we cannot do a loan until you go back to work, until it's back. So number one. Number two is if you're self-employed, the self-employed people have been a little bit difficult too, and everything is on a case-by-case. Guys, we've never been through this either. The mortgage business has never been through it. Just like you, everyone is experiencing differences in their business and reinventing. We're having to do the same exact thing. With self-employed people, we have to show that they're still making money. So we have to get updated bank statements right before closing showing deposits going into their business bank account. So there's more things that we have to do at the day of closing. We have to call the borrower and verbally, my processor calls the company to verify that they're still employed there and that their income has not been affected by COVID. And then I, the loan officer, call the borrower and make sure verbally, and I have to get it attested by the borrower that their income, that they're still on the same job and their income has not been affected by COVID. So, and sometimes people want to use their bonus or commission income to qualify, but then when your commissions and your bonuses have gone way down because of COVID, then now I can't use those to qualify you. So there's a lot of changes out there that we're having to ride. That's why we're kind of trying to tell people, please, we can close deals. It's not our underwriting turn times, and it's not the volume of to close quick. It's really just the extra stuff that we're having to do because of COVID. So, getting a contract out for maybe about 40 days, and just so that the borrower is not completely crazy stressed out, during the process.
Yeah. Yes, I know. You told me to stop asking for 21-day closings. I know. I heard you. No, I get it. I'm always pushing the envelope, but we're good. I'm giving you 28 days, so I'm nicer now. I give you 30. Caesar asked, what about the refinancing offers are going on right now? Yeah, he's asking about refinancing offers. So
and he said below, maybe you already spoke about it. Yeah, we did, but they're amazing. And some people are great candidates for refinance, and some of them are not. It just depends. It depends. How long are you going to be in the house? If you're going to be in the house for 2 or 3 more years, then don't refi, because it's going to cost you some money to do that. And then some people have awesome rates already. They have the high 3 rates. Those rates are amazing. What I'm seeing with refinances are the people with the rates in the 4s and mortgage insurance. When I can do a refi to lower the rate and also remove mortgage insurance, those are like no-brainers. Like they're saving $500, $600, $700, $800 a month with those refinances. And what we're also seeing, which is kind of cool, is what's called a property inspection waiver. And so a lot of these refinances, we run it through Fannie Mae or Freddie Mac system, and we don't even need an appraisal. We don't even need an appraisal. And that is super awesome, because so many times we get with refis in general, we send the appraiser out. The borrower thinks the house is worth one thing, and we as a lender, I don't have an MLS, and I'm not really looking at exactly what homes are worth every day and so we send out an appraisal, and if that appraisal comes in 20, 30, or 40 grand lower, then we might have a completely undoable deal, And so having the appraisal waivers has been key. What's happened with that is Fannie Mae and Freddie Mac. Oh, we're seeing it on purchases too, not just refis. But Fannie and Freddie have been keeping track of values over the course of history for the last years. And so if your borrower is a strong borrower putting 20% or more down, then you don't even need an appraisal.
Yep. Yeah, that's a good thing. I know it happened with one of my people the first time ever. I'm like, what do you mean? But it was all worked out well. It sped things up a little bit. Truly it did speed things up to get it done. If things are changing every single day, not only in real estate, but in how things are done with mortgage. And I mean, I see this all the time. Like, hey, who out there is able to do a loan for somebody who's got a credit score of 520? So people, things have changed with credit scores. Things have changed with jumbo loans. I mean, every single day things change. And like you just said, you don't watch the house prices, because you're a lender. Yeah. I watch house prices and I check to see what would make this more valuable than this other home and so forth. So that's what makes us a good team. When someone asks me a finance question, I'm like, I have no idea. Call Christine. Yeah. So I stay in my wheelhouse. I stay in my lane to make sure. So as far as it goes for values of homes, if you're looking to refinance it and you're just wondering, feel free to reach out to me. No obligation of anything, but other than I can try to sit down and just do a CMA. It's called a comparative market analysis. And I can look at it, and I try my best to talk to all of the appraisers out there, and I learn and I learn and I learn from them.
Good.
To try to see, and I will tell you this, every appraiser is different how they think of things. One appraiser might say, oh, this can be a bedroom, even though it doesn't have a closet. And others will say, absolutely no way. But I always go back to what the property appraiser's website says on that one. Some people say that a pool doesn't add value because nobody else has a pool. Everybody's got their own different opinion. But when you go to sell a home, though, it doesn't matter. It doesn't matter what other homes have sold for in the neighborhood. It's what is somebody willing to pay for it? What is somebody willing to sell it for?
That's what your house is worth, right?
And that's what the house is worth. And then we've got the appraiser, the appraisers out there that come in and give their opinion as well. And and sometimes we don't agree, and sometimes they go really high. I'm like, where did you come up with those numbers? So it's all very interesting. And my favorite thing is actually to price a home that's not in a cookie cutter neighborhood, because it's a challenge. I know, Christy's like, you're crazy. Okay. All right. Well, listen, we've been on here a little bit over 45 minutes now. And again, I just appreciate you coming on and talking. And we should probably try to do this almost like more on a weekly basis, that we come on and talk about things like this, because this is really important. We could do a little bit less time maybe, but just getting really pertinent information out there, especially the stuff about the forbearances. And then I'm sure there's going to be loan modifications coming in, and then people are going to start asking, should I stay or should I go questions and so forth. So, Christine, tell me, if somebody needs to get a hold of you, what's the best way to get a hold of you or your team?
Call the office line at 321-972-9421, or you can email either Team Wilson at tmf.mortgage or Christine at christine.wilson@tmf. Like Too Much Fun or the mortgage firm, whichever one you remember, .mortgage.
I prefer Too Much Fun.
I know.
Because, this is all just way too much.
Remember, right?
Yeah, it is. It is. It's easy to remember. Too Much Fun. Also, just so you guys know, the number has been scrolling across the bottom. And just a reminder that if you want the, is it called an amortization worksheet from Dave Ramsey?
Oh, no, that's a calculator, payoff calculator. You can just Google it. Just, you know, if they, but it's a link. I've been sending it out with everyone just because it's fun to play with. If you already have an awesome rate and you're not paying mortgage insurance and you're tempted, have that low mortgage rate envy, and you really are bummed that you have a 3.625 and you know that there's a low 3 out there. But I'm telling you, you can save interest by just making a few extra mortgage payments a year if you've got money in the bank. If you don't have money in the bank, then don't be doing that.
Right. Gotcha. Also, the sheets that I was showing you, the market pulse information. If you guys want any of this information, and also a video, and talks about the market as well. If you want this information, just give me a shout, and I can get that over to you. Just email me, and I can get it over to you. All right. Well, I think we're going to go ahead and conclude this, and I'll just say I'll be on here again next week on Thursdays at 3 o'clock. I generally come on with a scheduled Facebook Live. And this is Linda Schulte. I'm the broker owner of Schulte Realty in the Central Florida area. And as we always say, if you're looking for any kind of homes in Florida, just give me a call, contact me, because at Schulte Realty, we cover Florida like the sunshine.
I love that. That's awesome.
I think that's pretty cool. So, all right, Christine, thank you again for joining us. And we're going to go ahead and end this. Bye, everybody.
Bye.
Bye. Bye.